Morning, Steve Freed in Chicago with the morning grain comments. Well, we have kind of fractionally higher trades overnight. Yesterday we saw markets break down after some comments out of Europe, rallied the dollar, and then also we saw crude break. So the funds picked up their selling into the close. Technically speaking, for the beans, we're still like we're in this range-bound area. We found pretty good strong resistance at that 994 area in November beans and supports back at 934. So, you know, you've got record demand and you got record supply. The next thing we'll be looking at is the USDA's November yield to see if it goes up any higher. There's some guesses that the US yield could be as high as 54 bushels per acre, and that would really take the carryout way above expectations and should weigh on prices. We'll also be watching South American weather. It's a little bit too wet in Argentina, southern Brazil, too dry in the northern areas, but in a quote-unquote La Nina year, it actually should favor mostly normal conditions, maybe except for a little bit of dryness in Argentina. The corn market yesterday also failed at key resistance. We're looking at some disappointment yesterday. The near-term trend is positive, but we have to kind of think that maybe we're in this 344 to 360 maybe trading range until we know more about the U.S. corn yield, what the farmer is going to do as far as farmer selling is concerned. Again, you have the farmer holding a record supply that he has to sell, but we also have record demand. We also noted in the wheat that yesterday December wheat held above support, but the lack of follow-through triggered some selling along with the higher dollar. So we've got resistance now at 428, and support is pretty important at 413. Again, Minneapolis and Kansas City futures are supported. Minneapolis because of quality concerns, especially in the Canada crop, and Kansas City supported because of the dryness across the southern plains. We also noted yesterday that one private group came out and estimated U.S. 17 soybean acres around 88.5 million. That's down 100,000 tons from their 100,000 acres from their September number, but compares to 83.7 this year. We got one note from one of the brokers in Iowa that said that next year Iowa is going to be the soybean capital of the world instead of the corn capital of the world. They've got corn acres at 90.9. That's down 100,000 from SEP. This year we planted 94.5. And they got wheat acres down to 48.8. That's down 700,000 from their September estimate. And this year we planted 50.1. So again, we'll be already looking ahead to 17 to see what impact these lower corn and wheat prices has on planted acres. Outside markets, it sounds like some of the market feels that investors will go to the sideline, waiting for the November election and also waiting to see what the Fed does in their December meeting. 30-year bonds still look lower, and with the dollar still in favor versus most major currencies. So we still might be in these trading range in the grains and soybeans, and be kind of watching for the end of this year's growing season and next year in South America in a quote-unquote La Nina year. As always, these are my thoughts and those of ADM or ADM Investor Services, and have a safe and profitable trading day.